Whatever stage you're at with your trading, it's important to stop and gain perspective before planning your next move. Take a break from the charts and join in the discussion with our hosts, Jason Graystone and Akil Stokes, as they share insights, opinions and expertise on all things trading. Grab a coffee, pull up a chair and join the Trader Coffee Break.
Whoa. Welcome to another coffee break. How you guys doing? You good? Welcome back. Hope you've had a nice week so far. It's hump day, coffee break day. I'm Jason Graystone and I'm joined by the wonderful
Akil Stokes.
Yes, the one and only.
Properly caffeinated for this hump day and ready to get to April.
Yeah. Wow, man. April. What? That's not tomorrow, next day, right? 1st of April.
Yeah, too soon. It's always too soon, man.
It is always too soon.
Things fly, man.
It is. And before we crack on, I just want to say, look, thanks for tuning into this program every week. It's we really enjoy doing it, and our goal is to provide as much value around the topics that aren't widely spoken about to traders. So you feel less alone as a trader, because all these things crop up for every trader, but there's no one talking about it. So you grab a coffee, you have a rant, you ask questions, and we talk about all the boring stuff, but more important stuff.
I'll tell you what's cool, Jason. I get a lot of questions on a daily basis like you. You know what I've started doing? I've just started, instead of like responding in like these massive paragraphs, I just forward people to coffee break episodes. So I'm like, dude, we just talked about that the other day. Like, how do I know if my strategy is failing? And I'm like, post-market analysis. Like, here's the link, go check it out. So like, just subscribe, have that notification bell hit, and you can join us each and every week and watch the past episodes, and you'll get a lot of the answers to the questions that you have, especially if you're a newer trader, because we're kind of going in that order of knocking off the most popular and relevant topics that are out there. And like you said, that aren't often discussed because they're boring and not sexy and all that fun stuff.
Yeah, it's a fantastic resource. This channel is a fantastic resource, and it's going to just become bigger and bigger. But the beauty of it is it's not kind of everything about everything. It's all of the kind of fundamental, universal principles around successful trading. So whatever you listen to on this channel will be needed in your trading. So that's great. It's a fantastic place. And we've got a busy chat today. I don't know if you guys are like skiving off work or
hovering around the water cooler, their phones out.
We got a busy one. So this week we're talking about risk, how much to risk on each trade. And I've actually got the results for a poll that you ran, Akil, on your Twitter and your YouTube channel. Before I show the results to that, do you want to just talk about why you ran that poll, what the kind of purpose was behind it? And then we'll ask these guys, before we show them the kind of what came up most, we'll ask these guys in the chat what they risk as well.
Yeah, of course. And going off the subject of like the non-sexy, unattractive stuff about trading is risk management. I've always heard the saying that good traders are great risk managers. And we were just having this discussion this morning in a live room about a trader, we're talking about higher time frame versus lower time frames, and how the signals or the setups or the candles printed on the higher time frames they're much more important than the lower time frames. And he's like, well, what about frequency? If I have to wait for something to be confirmed on the daily, can I just go down to a 5-minute chart and get more frequency? And it's like, well, you could, yeah, but you're going to get a lot more false signals.
Yeah.
And trade frequency is something that a lot of newer traders they feel like they have to be in trades all the time. They have to be busy. I can't be a trader if I'm not trading. And then one of the lessons you learn over time is that it's really quality over quantity. It's more about the quality of trades you take, even if it's less, more so than like just the amount of trades. And risk management falls right into that. I think a lot of newer traders think like, I've got to make $1 million right away. If I don't make 100% return right now, I'm failing as a trader because, Pipzilla over on the internet said that they made 100% yesterday and made 200% today, and now I'm slacking. So they feel this need to make more. And in order to make more, they risk more, thinking that, hey, if I just risk more per position, when I win, I'm going to make more. And that's true to a certain extent. The problem is most of these traders don't win more. They don't prepare for what happens when they lose more. So when they take that extra risk, trying to get those glorious profits, it ends up backfiring them. They lose. And what happens to be a normal loss, and we talk about this with drawdowns, how our job is to survive them, keep our head afloat until the next extension comes. These traders don't survive it because they risked far too much. And all of a sudden, a normal losing streak is devastating to their account. So we were having that discussion, and I just was curious. I wanted to ask people, I said, hey, I'm very conservative with my risk, but even in the bigger scheme of professional trading, I actually think it's on more of the aggressive side. But what do traders think is a high risk? What is, what do you risk per trade? Is it 1%, 2%, 3%, 5%, 10%? And I was just curious about the answers that I would get. And like I said, if you guys want to type it in on the chat, we'd love to hear what you guys want to say, because I think you're going to be a little bit surprised by the results. Maybe not necessarily where the bulk lies, but where the gap is.
So what were the options, Akil? Remember, it was like
the options I think were, I got to remember. It was, I think, under 1%, and then it was between 1% and 3%, and then it was between 3% and 5%. And then above 5%, if I remember correctly.
Yeah. So you guys in the chat, let us know. Do you risk less than 1%, between 1% and 3%, between 3% and 5%, or more than 5%? Those were the options. I've just found them. So we're going to show you guys what came up in the poll, because we ran this across social media. But just interesting to see what you say. So George is saying 1% to 2%. You guys aren't fast enough. I'm just going to put the poll up right now. So on your screen, you should see now that staggeringly the result is between 1% and 3% unanimously is the majority vote across both polls. So yeah, Akil, there's the answers, right?
Yeah, and I was surprised in a good way. Typically when you feed stuff to the internet, we kind of, I guess we got to give our followers more credit. We have a really good tribe of followers that are professional traders. So maybe the people that are seeing our content are a little bit more educated than the normal people out there. But typically when you put something out to the internet like this, I expected like more than 5% for most people. And I think 1% to 3% is a good range, less than 1%. It was cool to see that kind of so high as well. So a lot of traders are really protecting their capital, taking low risk. What I found to be interesting is that 3 to 5%, like, it's just skipped over.
Yeah.
And I don't know why. I don't know if you have an opinion. Is it just you go from conservative, then it's just like, nah, just go really big after that? Like, you would think it would kind of work in line where it would. I don't know.
It's really interesting. It's really interesting. The 3 to 5% has only got 9.9% on Twitter, and like 6% on YouTube. That's crazy. I don't know. I would have thought the majority would be where the majority is. So that's as you say, our community is really, really decent. And obviously we've got everyone in the chat here. They're all putting 1% to 2%, 1%, 1%, 1.5, 1.5, 1.5. Yeah, I mean that's a great.
What's wrong with you?
That's great.
How are you going to get rich quick doing that?
But the 3% to 5%, why do you guys think that is? Man, it sends shivers down my spine that more than 12% of people answered more than 5%.
I've had a chance to think about this for a week since we first discussed, and the only thing I can think about is that maybe that's where the balance is. Maybe if we talk about professional traders or those taking a professional trading mindset, where it's like maybe 3 is that absolute max, where it's like, man, like even if I'm super aggressive, like anything over 3, and I've heard that a lot in my journeys, where it's like, man, 3%, that's like at the top of the risk scale. So maybe that's where it ends for the professional trader. And then after that, it's only the people that risk 10, 20%.
Yeah.
Maybe the professional conservative trader is like 3, that's the ceiling, no more. There's none in that middle ground, and everyone else is kind of the reckless, I don't want to say reckless, but the the big riskers. That's the only thing I can think about, is that's where the scale ends. That's the separation gap between the quote unquote professional traders and the ones that are a little bit more risky. I don't want to say reckless, because I'm going to share with you a message in a little bit about someone that has a different approach, but maybe that's it. Maybe that's just the gap.
I think you're right. 22% on Twitter said more than 5%. Jeez. Oof. Oh man, and Bobby's just got a good point. He said maybe people going from risking little and not seeing reward quick enough, so they ramp it up to get rich quick. You know, that could be it. That could contribute to it, certainly.
Oh, you're right. Someone KP just brought the McDonald's guy you interviewed.
Yeah,
a couple
man.
Years ago, or I don't know how many years ago now. That was
the guy at McDonald's who couldn't look away from his phone. I remember he was saying he was risking 15% a time. Yeah, that's a great point.
I don't know if I told you. I could never watch that full video.
What, from cringing and
pain? It's like watching like a horror movie, or like, it's just like I can't, like, it just, I couldn't.
Yeah,
like I couldn't do it. It was like I knew where it was going. I knew it wasn't going to change. And it's like it's like watching a car crash. Like, I'd rather just turn my eyes away, because I'm like, I know, like we deal with this. Even traders we work with, where we try to help, but every once in a while we get that person that is just like, they're unwilling to help themselves, and it's like you know where it's going. You just don't want to watch it.
Yeah,
that's
and with that type of risk management, I think your ego plays such a big part in your downfall and your kind of demise as a trader. Because I mean, this guy, I don't know if I got this bit on camera or not, but I was talking to the guy for quite a while, and I remember him saying he had a big security business and he was like living the life, and now here he is, like wearing jacket with rips in it, and like he can barely afford his rent, and he's just desperate to get a win on trading. And oh man, it's just so sad to see. It doesn't need to be like that. That was being in the right place at the right time to bring awareness to the rest of the guys. That was a great video if you can go and stomach watching the whole thing. So that's the poll. What do we recommend? What's the kind of approach to risk management?
Before we get into that, I have an interesting question I want to share with you, and I think this is I think it's a good one, and I think it kind of maybe doesn't answer our question about why there's the gap in there, but it is something to ponder and something that we should touch on. And there was a question that said, swing trading, this was under the poll, said swing trading, I risk 5%, scalping 10%. And again, I don't, that whole thing, we can get into scalping or whatnot, but here's the part that stood out to me. It said, I've been trading for 15 years and I used to trade 1 to 3% risk, but I would always kick myself at the end of the year when I saw how much more money I could have made with higher risk. That's a little bit of a red flag right there, but we'll keep going. So I finally increased my risk, increased it, but it's very important. If you're going to take higher risk, you have to know your strategy and how it performs over the long haul. I'm talking 5+ years. Most traders have not been trading long enough to take risk over 3% per trade. But once you have been profitable 5+ years, I would advise you increase your risk. And I thought this was very interesting, because usually you read that and initial reaction is like, you idiot, what are you doing? But I think there is something to, maybe not necessarily saying you need to increase your risk or that much, but there is something to saying that, as everyone's in a different situation. So we have a few traders on the chat here that are going through funding challenges. I talked to a few of our traders on the platform who have been funded, and they have very strict risk requirements from their challenge. So they have to risk less than what they maybe normally would with their own money, because it's not their money, right? Their boss is saying, hey, this is your cap, and you'll get that whenever you work for a prop firm or you're managing money. However, when it's your own money, you could do whatever you want with it. Hopefully you do it in a responsible way. But I can see the case for someone saying, hey, I've been doing this for 15 years. I know my system. I know my setup. I know what my max drawdown is. I know what my numbers are. Based on what I've seen from that data, I know that, and just like kind of what we do with our money management spreadsheet, I know that I can risk more and still keep enough safety not to do anything dumb.
Yeah.
And I'm curious, what do you, maybe not the specifics of how much he's risking, but that idea of the more you know yourself, the more aggressive or risk you can take. Is that something that is yay, nay?
Yeah, I agree. I think we talked about kind of discretion becoming secondary into your trading. And look, I think some of when you get to know the higher quality setups, if you've got a scoring system for your trades, for instance, you can become more aggressive with your target taking or your reward to risk profile or your entry technique or your position size. And, you build that dynamically into your trading system using your own discretion. And by doing that, you know that you understand and you've got full control over your trading plan. If you try to just shoot from the hip and hit a 5% loss in one trade, not really knowing why you've taken a 5% loss, that's going to hurt you emotionally. And if you take two of those, that's really going to tip you over the edge. So I 100% agree. I think there's nothing wrong with adjusting position size and taking on more risk. But as I said, it's secondary. It's not even secondary. It's like thirdly, if that's a word.
Exactly.
It's like, you build a plan, you minimum risk, you become an excellent risk manager. You then get to know your system inside out and you build discretion, and then you can apply some dynamic management of trades, entries, risk, and risk reward profiles. That's what I would advise.
Yeah. And what I love about the trader is the statement is that he said, hey, he's not saying, hey, you do this 1 month or 1 month into your trading career. He's like, look, 15 years in, 5 years in, like once you really, you earn, just like how you earn discretion, you earn that right to risk more on, again, it could be overall, it could be on certain setups, it could be in different markets. It's really no different, right? Well, we worked with a lady, Gabby, who said she got into trading originally because she wanted to be in control of her finances.
Yeah.
Right. It's no different from you saying, hey, do I want this company managing my 401k, all my investments, where they're going to take most likely very low risk because their job isn't actually to make you money, it's to keep you around so they can charge you account management fees and all that fun stuff anyway. Or do I want to go into a financial market myself, even if it's just, hey, I'm trading an index or something like that. Technically, in a way, it's a different type of risk, but you're taking more risk based on, what you've learned. And do you want to take that skill set and do it into active trading where technically you're taking more risk, right? Because you're in charge of it. So I do like that idea of, or at least the concept of, hey, you can adjust your risk based on what you've earned as a trader. I do think there obviously still need to be levels and you still need to be risk averse, bigger picture. Like you don't want to do dumb stuff and get cocky. But I would suppose that if you've made it 10 years in the market, you're probably not doing that anyway, because the people that take that type of risk, they're not making it 10, 5 years in the market.
No, exactly.
So I guess it works itself out.
Exactly. Yeah, no. What do you guys think in the chat anyway? Let's see what you guys are saying. You can stomach higher volatility. Cutting risk per trade when the market conditions are less favorable for you. Your edge is also a good way to smoothen your drawdown periods and preserve capital. Great. I mean, these are the type of answers we get in our community, man. You just don't see this, you really don't see this anywhere else. Start with a small, and then with experience and journaling, you will see whether you can increase or not. Great. Exactly that.
And the cool thing, I mentioned the money management spreadsheet earlier. If you guys aren't familiar, we've showed it in a few of our videos, but you can play around once you have your either backtesting data or your live data. You can actually play around and see what that risk looks like. So you don't have to kind of just jump right in and be like, oh, I'm going to go from 3% to 10%. You can actually plug in the numbers, right? Where you have the numbers, plug in the different risk management tactics, and you can see like, hey, if I would have risked 5%, oh man, it would have gave me this much. How much would it have affected my drawdown? You can find that balance area to the level you can stomach. Maybe you're not comfortable going to a 10% risk on trade because that 17% drawdown you took is now going to be 30, but you can feel comfortable going to 5 because, well, it gives you a bigger return on investment, but the drawdown period isn't really changed too much. Maybe you go from like a 17% to a 20% and you're like, hey, I can deal with that, right? So you get a chance to kind of see what it looks like and kind of understand, hey, can I stomach this as a trader? Is the risk worth the reward, or is the reward worth the risk, I should say?
Yeah. I think the reason most traders want to go high is basically what Bobby said earlier, and that is they focus on monetary gain and they want to ramp up their returns, which every trader wants to do, but unfortunately it's much wiser to focus on percentage gain rather than monetary gain, because that's what's going to ultimately allow you to sustainably trade profitably into the future, and also compound your account and experience exponential growth and get investment if you want to, attract investors, give you the confidence to release your own capital from other areas of your business or your equity in your house or whatever. It gives you confidence to fund your account as well. If you can do 2, 3, 4, 5% a month or whatever, the skills to generate that are identical whether you're doing that or $1 million account. So focusing on percentage gain is definitely wise over profit.
Yep. That's why I hate seeing the things where it's like, I made this many pips, or someone sent me this thing the other day about I made this many dollars. I'm like, that doesn't mean anything. It means that, like, did you make $100 off of $1 million account? Because if you did, then that's not anything, right? Did you make $100 off of a $200 account? If you did, you made an incredible return. Like, it doesn't mean. And then what is your risk? What did you risk to make that? The percentage is really the thing. And that mindset, like you said, Jason, of like, hey, understanding that from a day-to-day standpoint, I just have to do the same execution in the market. The only thing changes is how much I'm doing it with. Yeah. And if you can have the skill of doing the same thing, there's a psychological element that you have to kind of take on as you start investing more money, obviously, but you can do the same thing and make a higher amount of money. And it's really cool to be in an industry where you don't really have to change what you're doing, and you could just keep consistently making a higher and higher ceiling. There is no ceiling. It's incredible. No. That's what I love the most about trading.
Absolutely. So what do you guys think? What would you advise someone who is thinking about risking 5% or more? Maybe put it in the comments so that anyone who is attracted to this video, who is risking 5% per trade, not per month, is going to is gonna have their eyes open slightly. Well,
one thing to touch on too, and I don't want to get too much because this is going to lead us down a different topic. I know our time is done, but just be careful with that. Stuart says on the chat, it makes sense to risk down through a string of losses. I'm not personally a fan of that tactic, and I won't dig too much into it, but think about it like this. Trading is a game of probabilities and risk management, right? So we should know the probabilities of our system. So if we have a system that hits 60% of the time, right, on historically, we should win 6 out of 10 trades, right? Obviously, that's too small of a sample size to be realistic, but just to make the numbers even. So if we take 4 trades in a row, the probabilities are that the next 6 trades are more likely to be winners than losers. If we are reducing our risk after we get those losers out the way, where we run the chance of hindering our reward on the winners that are coming and not making up for the money that we lost in the previous trade. So you got to be careful with kind of just like, hey, I'm on a losing streak, so I'm going to stop trading or trade less, because you're going to need those winners to dig you out of the hole that you had for your losses. So just something to kind of think about there. And I know why we do it. Sometimes it's small picture. I don't know if you have an example you want to share, Jason, on that.
No, I think we could do a whole nother topic on that. Because there's one thing to incrementally risk down through a string of losses, like using what is it, the Martingale strategy, or there's kind of a smooth ratio money management where you do decrease your position size as you go through losing periods. And maybe, we have done a topic on that, but I think we could maybe
take a deeper conversation than what we just mentioned.
Definitely. Chris says, do you have any backtesting or data to warrant that much risk, the tolerance to handle that much risk, and the resources to weather the storm that could happen in a drawdown? Great point. backtesting goes on to backtesting again, right? Knowing your numbers, knowing what you can risk, what your maximum drawdown is likely to be, how much you can even start to risk per trade. And then there's going into how many trades you're in. So like, imagine if you risk 5% per trade, but you're in 7 trades for the day.
Better not lose.
You better not lose. Like, it doesn't take into consideration. It doesn't take that into consideration. So although even with risking 1% or 2% per trade, although that's not the worst thing you can do, it's also not the most efficient and dynamic an effective way to manage risk. It's kind of it's almost like a safe place, but you still have to be aware. As I say, if you're in 10 trades, that's 10% of your account. Goodbye in one day if you have a losing drawdown. So knowing the numbers is key. That's a great way to end on that point. And I think we want to announce a little event that we're going to be running in 11, 12 days, something like that.
Yeah, the 11th, I think it starts. Is that? I don't know what day it is.
This is a 2-week event, and it is our Emergence event, which is flagship, but we're going to run it for 2 weeks. So this has never been done before. This is going to wipe it out of us completely.
We'll need some coffee, man. I'll tell you that.
I'm going to be drinking pre-workout for the whole thing, man. This is a 2-week event, Emergence. We'll put the link, but it will be at tier1trading.com/emergence. The site will be up later today, and you can go and register for that. But you definitely don't want to miss that. And stay tuned on all of our social media, and you'll see some promo for that event as well. Anything you want to add to that, Akil?
Sign up. Trust me, if you've never been to an event that we've done before, these are free events. You're going to learn more in these events than what you will pay thousands for in other places. More importantly, though, and that's what's a little bit different about this event, connect with traders, man. Use it as an opportunity to connect with people that are either in the same path or position as you are, or people that have done it. I mean, you hear Jason and myself talk all the time. We're kind of old heads in the game now because we've been around for a long time. I think it's cool to take advice from us, but to have traders that have just made that breakthrough, that have gone from struggling to consistently profitable, to be able to pick their mind and be like, hey, what did you do? Because I want to do it too. You can't put a price on that. So check it out and take full advantage of it. If you're going to do it, you dive in. Don't just dip a toe and do a little bit. Like, go in and take advantage of it.
Yeah. Amazing. So guys, although we'll be back next week for another Trader Coffee Break, just get that date in your diary. Make sure you set a reminder for that. You're not going to want to miss that. And if anyone you've been talking to is interested in trading, share this channel with them. We're almost at 1,000 subs. I think we're like late 800s. So another 100 or so, and we'll be there, and we'll do a special Q&A episode or something. But share that event as well. Bring them along, especially if you've been to one of the tier 1 events before. You know how high energy they are, how great they are. So we've got great stuff lined up for this one. So we'll love to see you all there. It's called Emergence. Okay, so Emergence, EMEGNCE.
Head to the site. You'll see it. It'll be up soon. Yeah, tier1trading.com. You won't miss it.
Tier 1 Trading. And also, don't forget in the comments to let us know what topics you'd love us to discuss in this coffee break. So if you've got something going through your mind and you just wish you could get another opinion on it, those are the sorts of things we want to talk about. So get your comments in. We read all the comments and we use those to produce topics that you guys want to talk about. So make the most of it. And until next week, remember, less is more sometimes. And be careful out there in the markets. And we'll catch you in the next coffee break. Take care.
Thanks for joining us for the Trader Coffee Break. Be sure to like this video, subscribe to the channel if you haven't already, and don't forget to hit the notification bell to never miss a live discussion. Follow our hosts on social media. And remember, do nothing to gain perspective on everything. See you next week.